else is happening? This next one's coming from Cointelegraph, and real-world tokenizations can drive home ownership. And Corner Home says Quarter Home CEO. So yeah, currently the 30-year fixed mortgage rates in the United States are close to 7% as younger individuals struggle to purchase property, and that's no joke. Like the my generation and beneath, like really don't see the opportunity or really the reality of actually buying a home. Some people are just living paycheck to paycheck, hoping like something happens, collapses, and fixes itself. But that's not the right mindset to be. Just start investing in XRP, Bitcoin, just any asset you can that will appreciate in value later on. And then maybe you can get a house. But if you're just living to paycheck, it's going to be a struggle just to survive in the future. So just saying. But yeah, let's learn a little bit more about these digital assets coming to fruition. So home ownership, once an attainable dream in much of the developed world, is quickly becoming a distant fantasy for younger generations, as the price of the residential real estate soars and interest rates are driven to relative highs in an effort to quell inflation. Now, Cointelegraph sat down with Shannon Deesh, CEO of Quarter Homes, a company offering tokenized alternatives to debt-based mortgage financing. Now, to get the lowdown on how real-world assets tokenization can foster home ownership, well, the CEO explained that tokenizing residential real estate introduces a new equity-based model for home financing that brings together real estate investors and aspiring homeowners as equity partners in the transactions. Now, a stark contrast from the current creditor-debtor relationship characteristic of home mortgages. Now, here's a little diagram of that. The higher mortgage interest rate payments pushed 320,000 mortgages into poverty back in December of 2023. So, nasty chart. So yeah, this chart showcases the destructive effects of debt-based mortgages. Now, this works by assigning fractionalized equity rights via tokens to both the investors and the homeowner, allowing both parties to share in the appreciation of the underlying asset and realize their equity gains by simply just selling their tokens. Now, in this model, investors can capitalize on both the appreciation of the property and monthly cash flows from the homeowners. Now, Deesh then remarked on the lower barrier to entry tokenized real estate provides the potential for homeowners. She goes, retail investors can buy investment properties very easily. It's expensive, but they have to save up for the down payment, all those things. And so it's really just opening that opportunity up to folks that don't currently have access to that type of investment. So that's what this really is going to allow them to. But moreover, tokenization provides an alternative to the current equity tapping solutions, such as home equity lines of credit and other private equity refinancing, which are often out of reach for many individuals or are predatory, according to Deesh. Now, investor benefits too. How does this all work? Let's find out. On the investor side, tokenized residential real estate give investors an alternative avenue for property investments that removes the headaches of rental agreements and property management. The Quarter Home CEO told Cointelegraph, additionally, by connecting investors directly with aspiring homeowners, costly intermediaries such as banks and Wall Streets are removed from the transaction, bringing significant savings to both the investors and the homeowner. Now, blockchain is changing the real estate game, and we said it all the time. We don't need those middlemen over there. It should just be peer-to-peer, but if you can get those deeds on the blockchain, boom. But yeah, in 2023, Ralph Kubley of the Casper Association pitched a similar idea of tokenized mortgages to provide much-needed transparency for the home mortgage industry to avoid another 2008-style financial crisis. Now, here's a chart showing the U.S. added fewer gross housing units than in 2018 and then prior to 2008. So, low charts there. But the Home Construction Collective is also leveraging real-world assets and tokenization to use blockchain-based crowdfunding mechanisms to build residential homes, which the organization claims are deliberately undersupplied to the market, pricing first-out home buyers. Now, on the commercial real estate side, Hilton Hotels and Resorts recently issued tokenized debt to build a hotel in El Salvador. Investors must invest a minimum of $1,000 into the project to receive tokens that are exchangeable on the Bitcoin Layer 2 liquidity network. So how do they do that? Did they do that how we did that with our tokens here for the crypto clubs? Do they use runes? I don't think they would use ordinals, because I came across that when I was building our token that you can't send them out individually. So who knows? So maybe they made a rune style of it to be on the Bitcoin Layer 2. And is that a Layer 2? I could have swore there. No, yeah, I guess it really is. But digital real world assets on the blockchain is a real thing, and like home ownership with homes, everything was definitely down the road. And actually, it's kind of here now. It's happening, but that's what we said back in the day. But no, it's actually pretty cool that it has been talked about and been like mulled over, and now it's here. So pretty cool. Yeah. So that's that news article for you. Hope you enjoyed this one.